Hi everybody, welcome back to Chapter 9. In the next few videos we'll talk about short-term liabilities arising from payroll transactions. Payroll liabilities arise from the payment of salaries and wages to employees, employee benefits, and payroll taxes levied upon the employer and the employee. Has anybody been surprised and a little disappointed in the size of your net paycheck? Let's say you worked 20 hours and are paid $20 per hour. You earned $400, right? So why isn't the amount on your paycheck $400? The answer is that employers are required to withhold certain payroll taxes from an employee's gross wage and to remit those payroll taxes withheld to the appropriate governmental agency on behalf of the employee. Employers are required to withhold FICA Social Security taxes, FICA Medicare taxes, state income tax, federal income tax, and employees may ask the employer to withhold some voluntary deductions as well. If you take your gross pay and subtract these taxes and voluntary deductions that were withheld from the net gross pay, you will calculate the net amount that's on your payroll check. Employees' FICA taxes include FICA tax for Social Security. The 6.2% tax rate has been in effect for many years. However, Social Security taxes are withheld only on employees' wages up to a wage base. And a wage base is a set amount that when an employee's wages reach that amount during the year, then their wages are exempt from that tax for the rest of the calendar year. In 2018, the Social Security wage base was $128,400. Once an employee reached their cumulative gross wages reached $128,400 in 2018, then they were no longer charged Social Security tax for the rest of the calendar year, and they didn't have to start paying Social Security tax again until January 1st of 2019. The Social Security wage base usually changes every year. Let me give you some examples. In 2017, the Social Security wage base was $127,200. That wage base increased in 2018 to $128,400. In 2019, it jumped up to $132,900. And in 2020, it increased to $137,700. So as you can see, the higher the wage base, the more Social Security tax is withheld and paid to the government. FICA Medicare tax, the rate of 1.45% has been the same for many years. There is no wage base for Medicare tax. That means all of an employee's wages throughout the entire calendar year are subject to the tax of 1.45%. Employers must pay taxes withheld from their employees to the Internal Revenue Service on behalf of their employees. Employers are also required to withhold federal income tax and state income tax from an employee's gross wages. These amounts are usually calculated based on a payroll withholding table, and the table will charge the tax depending on the employee's earnings, the employee's marital status, and the number of withholding allowances the employee is claiming. And just like the Social Security taxes, employers must remit the taxes they withheld from an employee's gross pay to the appropriate governmental agency. Employees can also request an employer to withhold certain voluntary deductions. Examples include union dues, savings accounts, pension contributions, insurance premiums, and charities. Again, the employers will withhold the amount, and then they must remit the amounts withheld from the employee's gross wages on behalf of the employee to the designated agency. Payroll liabilities also arise from employer payroll taxes. Payroll taxes imposed upon the employer. Not only does the employee have to pay payroll taxes, but the employer must also pay payroll taxes. There are 4 employer payroll taxes we're going to talk about in this class. FICA Social Security tax and FICA Medicare tax is imposed not only on the employee, but those taxes are also imposed upon the employer, and employers must match the amount withheld from the employee's gross pay. So whatever the employee's withholding was, the employer must also pay a matching amount. Federal unemployment tax and state unemployment tax is also imposed upon the employer. Federal unemployment tax, commonly known as FUTA or FUTA, is imposed on a $7,000 wage base. This has been the same wage base in effect for many years, and the tax rate has been the same for many years. Generally, the FUTA tax rate is 6% on all employees' wages up to $7,000, but there's an inherent credit given to the employers of 5.4%. Therefore, the net tax rate is 0.6%. We're not going to go through all of these gross wages and with the credit. We're simply going to practice using a rate of 0.6%. State unemployment tax, SUTA or SUTA, depends on the state. In California, we have an experience rating system for SUTA. The more unemployment claims an employer has had, the higher his tax rate will be. The fewer unemployment claims an employer has had, the lower the tax rate will be. So California's SUTA tax rate varies depending on the experience rating of the employer. However, the SUTA tax, whatever the tax rate is charged on $7,000 wage base for each employee. So it makes calculations kind of easy because the FUTA and the SUTA wage bases are the same. Well, that's it for this video lecture. In our next video lecture, we will practice calculating the amounts on which Social Security, Medicare, FUTA, and SUTA taxes are charged.